This is the DeFi Decoded podcast by 9 Point Partners in cooperation with Prophecy DeFi. The ideas and opinions expressed in this podcast should not be taken as investment advice. Always consult with your financial advisor before investing.
Hello and welcome back to another episode of DeFi Decoded. I'm Alex Tapscott here with Andrew Young. The big story today is inflation. The CPI print came out at the highest level in over 40 years, but within that number, core inflation actually declined month over month. So there's a lot of discussion here about, is that an aberration or is this perhaps the peak of this inflation cycle that we're in? There's a lot of impact obviously to be had around asset prices. Inflation causes central banks to raise rates, rates go up, asset prices generally decline. So far, crypto has participated in that despite the long-term potential of Bitcoin and other assets to be an inflation hedge. So there's lots to kind of unpack here. Andrew, your just initial reactions after seeing that and the response in the market.
Yeah, no, I think, so obviously it came in at 8.5%. Like you said, core inflation, which strips out food and oil prices, which tend to be more volatile, actually came in below estimates. And so there's sort of a divergence between the headline number and what people sort of consider sustainable inflation, which is sort of the core inflation. Interestingly enough, also actually used car prices finally went down a little bit, though they are up over 30% on the year still.
Are you in the market?
Yeah, looking for some a used car. But, and I mean, you can't even buy a new car at this point. It's like 6-month backlog. So like anecdotally, inflation is still raging. And one thing that was also really interesting, we're starting to see it spill out into the geopolitical sphere. Sri Lanka just paused payments on their foreign debt. The idea being that they need to safeguard their dollar stockpiles to be able to buy fuel and food. So it's definitely starting to spill over across in the geopolitical sphere, which could have huge ramifications for countries with sort of low dollar reserves if we continue to see huge inflation in food, which is directly sort of correlated with the situation in Russia and Ukraine, given Ukraine's status as a major food producer. But to take a step back, I was kind of surprised to see crypto get sort of nuked downwards yesterday, almost in anticipation of this inflation print. And so it just reinforces this narrative that crypto is a risk asset and not necessarily a inflation hedge like it was initially sort of presumed to be. I'm kind of curious what you think, I guess, on that, because you guys have been tracking data on correlations and things like that to the equity markets and crypto.
Well, it's a topic that's come up also on this podcast. We spoke with Scott Melker a couple of weeks ago about this question of, where does Bitcoin fit in a portfolio? And we've written it up recently for the Digital Asset Digest, which I would encourage people to check out. You can subscribe at digital.9point.com. But basically, for the past 5 years, Bitcoin has had a very low to no correlation with most other assets, whether it's, bond indices, stock indices, or other kinds of assets. It has generally marched to the beat of its own drum, which is quite interesting. Recently, though, we've seen periods where that correlation has spiked, and specifically spiked to the NASDAQ. And I'm talking about Bitcoin. I don't know that there is a good index or gauge that we can use at this stage to track, the asset class in totality. But when it comes to Bitcoin, right now, actually, in the past week, correlations to the NASDAQ have hit an all-time high. So the question is, like inflation, is this permanent or is it transitory? And I think that it's probably transitory. By that, I mean the correlations sometimes spike around periods of, risk off, where there's liquidity that's being, gathered in dollars and what have you. But overall, I still believe that, and this is informed by the data we've been tracking closely, that Bitcoin will, remain an asset that does provide diversification in a portfolio. And I think that there's a lot of reasons for that. It has certain attributes which make it tech-like, this is high growth, it's growing users, adoption, utility, and so forth, sort of like, platform technology business, but it's also a store of value. And it also has sort of, as you've pointed out, geopolitical advantages as a credible, neutral, non-government based form of money, which, in times of crisis apparently is very useful, as we've seen in Ukraine and Russia. So it's too simple to simply say, oh, okay, now Bitcoin's, now that it's like $1 trillion or so, it's basically just another FANG stock. It's also too simplistic to say that it's digital gold and, this is something short term. I think there's a truth there that is maybe hidden or sits in between those two realities. And, that's like nothing in life is simple, and Bitcoin is, a complicated thing, obviously. In terms of like the markets overall, though, my view on this print, and I might be wrong, is that this is the high watermark. And, I'd be bidding risk assets, including crypto right now on the back of this. Like all of the rate hikes have been brought forward and are priced in my opinion. We've got this inflation print, which, as you pointed out, contains a few little nuggets that suggest that the mania that has sort of defined the last 6 to 9 months is certainly cooling off. And, look, I mean, if this war spirals out of control and oil goes to $250 a barrel, I'll be wrong about this. So there's a certain leap of faith. But overall, if you look at some of these other trends around supply chains, around, demand destruction and so forth, it seems as if the ship is being righted somewhat. I don't think we're going to be back to the 2% level that the Fed has as its target rate anytime soon. But I think the days of 7%, 8%, and prints which keep being higher and higher are behind us. So in my opinion, the context here, I think the market's still a little uncertain. It wasn't like a very firm bid following the news. The Nasdaq's up 1%. Bitcoin is just sort of hanging around 40K. But overall, like, I think that the next little while is going to see a little bit of a relief rally across these assets.
Yeah, I think also there's a lot of people are starting to talk a little bit about this, but it's the higher this inflation is kind of a tax on consumers. And so it increases the possibility of a growth scare. So growth actually hitting downside. And if you combine that with hopefully, obviously, some sort of relief in the Russia-Ukraine situation, which, at least from what we've seen, things seem to be settling down a little bit. At least it seems to be more and more contained to the eastern part of Ukraine. And so if you combine sort of that plus sort of decreasing growth expectations, which would then sort of forecast easier Fed tightening, maybe perhaps relative to expectations, which would then provide sort of the environment for another big risk on environment. At least from what I've seen too, looking at crypto protocols seem to be relatively overvalued. I would say sort of 6 to 8, 9 months ago during the last run up. You had things like Shiba Inu, which were hitting new all-time highs. A lot of sort of DeFi protocols that were copy paste projects with huge valuations and no fundamentals. Mm-hmm. And it's kind of the exact opposite right now. There's a ton of really solid projects that are down 90% against its all-time high. And if you kind of look beyond the blue chips like ETH and Bitcoin and sort of the top 5, things have gone absolutely killed, and they're starting to approach what I would consider sort of being undervalued, at least relative to fundamentals. So I think it's actually
bargain basement prices. Not that this is the Not Investment Advice podcast, but are you thinking of anything in particular? I'm just curious.
Yeah, I mean, there's a bunch of things. I mean, one thing to sort of point out is we were talking about this last week with one of the big scares to the whole crypto environment, particularly alternative layer ones, was the Ronin hack. So the Ronin, which is the layer 1 blockchain for Axie Infinity, which is the largest play to earn blockchain game in the world.
Yeah.
Ronin was hacked for over $600 million. But what's interesting, and this really does sort of display the resilience, Sky Mavis, who's the development company behind it, was able to quickly raise $150 million with thanks to Binance, who was leading the round. and has now kind of put together a plan for compensating everyone and reopening both the bridge and the DEX. And so I think, to me, that was actually an incredible sort of show of resilience in the small cap crypto space. The fact that able to just quickly piece together this round, plug this hole. There wasn't the sort of level of panic and market collapse you likely would have seen 4 years ago if the same situation happened. So,
yeah, but it also says something else, which is that we're happy with we like decentralization crypto assets when things are going well, but when there's a hack, we're looking to some central authority to make us whole. Is that right? I mean, this is, I think, one of the paradoxes of DeFi is that we're always hoping that the devs will do something, or that like the founder will step in, or there'll be some sort of backstop in the event of loss. I think that's probably overstated as a narrative. I think, like, by and large, DeFi on ETH and in the Cosmos ecosystem, like it works great, and these things don't happen all that much. But still, like, you see these events once in a while, and you realize that there's still some growing pains, and the appeal to an authority I find quite interesting, given the benefits and the promise of decentralization. Well, I think that's basically it for us today, right, Andrew? We've got a great guest coming up next, Stephane Ouellette, the CEO of FRNT Financial. He is his company's going public soon, actually, so we're going to speak to him just on the eve of his IPO. That'll be really interesting. So stay tuned. That will be coming up next on this episode of DeFi Decoded.
So welcome back to another episode of DeFi Decoded. I'm Andrew Young, and I'm here today with a very special guest, Stephane Ouellette, the CEO and founder of FRNT Financial. Great to have you on, Stephane.
Thanks, Andrew. Thanks for having me on.
So I'm really excited about today because, I'll let Stephane talk more about FRNT, but it's a little bit of a deviation from our typical sort of DeFi projects, and so it's going to be great to get a different perspective. But I know Steph is often quoted in Bloomberg for his takes on sort of the macro markets and crypto markets as well. So before this, Alex and I were talking about the inflation print that came out yesterday morning. Just kind of curious what your thoughts are on that, and whether it has any sort of implications on the crypto markets overall.
Yeah, for sure. I mean, absolutely. There's plenty of implications. The prints over the last few days have been very extreme. I would say, though, that I think that there's a lot of people within the crypto ecosystem that are looking for these prints to yield kind of higher prices. And I'm a little bit mixed on that, and whether or not this is kind of something that's already been priced in. If you recall, well before we were, DeFi token valuations were exploding, and, Bored Ape NFTs were selling for $3 million. This whole crypto rally started in the summer of 2020, where guys like Paul Tudor Jones and other famous investors started viewing Bitcoin as an inflation hedge. And that, started around BTC 8,000, 10,000, and took us all the way up to 65,000. So, and then has led to people going further up the risk curve, and which followed with an Ethereum rally, and then other token rallies, and DeFi and NFTs, and then ultimately metaverse. So we've come a long way from what initiated this rally to begin with. But I think that what was happening in the summer of 2020 was that, investors were kind of pre-positioning for an environment that looked exactly like the one that we're in right now. And I think that kind of incrementally incrementally for BTC, beyond what we're seeing now, I think that, that the inflation figures that we would have to get would have to, be pretty impervious to central bank activity that we're seeing. That would be incremental to the kind of inflation argument for cryptocurrency. But I think that, a lot of what we've seen over the last 2 years has been pricing in this kind of an inflation scare, and any kind of future appreciation will have to see kind of even greater inflation scares.
Right. So I guess, where does that put you over the next kind of 6 to 12 months then? Are you, because you also have the daily newsletter as well. Just a quick plug for the FRNT Financial daily newsletter, which I follow. I think hundreds or maybe even thousands of other people follow as well. I guess, what's your outlook over the next 12 months for crypto in particular?
Yeah, so I mean, I view the market as a little bit bifurcated, so in general, I view kind of the fundamentals around current, BTC valuations as relatively fair valued. I think you can make a lot of fundamental arguments that center around use case increases, that start to do relative valuation against other payments companies or infrastructure globally. And I think where we're at with roughly kind of this sub-trillion dollar Bitcoin price, it makes quite a lot of sense, especially when you see kind of things like nation state adoption start kicking off and all that. But I still continue to be extremely concerned by inflated altcoin valuations. I mean, there's networks that have well over $1 billion market caps, some over $10 billion market caps that still have very kind of modest use cases currently, and even their future planned use cases aren't very well defined. So my feeling in the market is that these altcoin valuations continue to, create an existential risk for some of the tokens that represent more developed networks. And it's with so much cross correlation within crypto, it's hard to imagine an environment where these altcoin valuations right size and you don't get an impact on some of the more mature blockchains like the BTCs and ETH and all that. So generally, I think that there's a lot of things that are positive for crypto prices. I think that the market dynamics are also setting up for a rally. We look at things like, typically when volatility gets to be muted like it is now, it precedes massive rallies or massive moves, and most of the time rallies. And the massive sell-offs often follow really high volatility as opposed to really low volatility. So there's in general, leverage has really gone down in this space. General sentiment I find to be bearish, which to me is a bullish indicator. I still see the continued inflation. It just and bond markets and the bear market in bonds. It strikes me as very there's very few places where capital can go right now. So I think there's a lot of market tailwinds to support kind of the more mature networks. I just get totally spooked by these altcoin and new token valuations that I continue to view as posing existential risk, but they've held in okay.
Yeah, totally. And I'm seeing one of the big sort of downsides I see in the market is that even though the public tokens have gotten sort of smoked over the last 6 months, the private valuations, so the valuations that are being cited for seed round raises and Series A raises are actually still quite elevated. And as those tokens come on the market, that's just kind of a new wave of supply. Typically also at these sort of higher multi-billion dollar, I've seen a ton of projects raise at billion-dollar valuations before they even have a product. Though a lot of them have pretty innovative technology, but still.
You're getting like these pockets of bull market still, and some of these there's still kind of irrational exuberance around a lot of new projects. I mean, the one we covered in our morning note this morning, Luna. I mean, that's just crazy. It's like my opinion is it's kind of crypto financial engineering that's going on, and you're still seeing people just fall over for that project. And there seems to be waves of these new projects every couple months that kind of just get a huge amount of momentum behind them, not necessarily tied to any kind of fundamental use case. And so it's not going away. So while we're in this sideways market for some of these more mature projects, we still have these kind of pockets of just still craziness that's going on in some of the ecosystem. So that's what I'm referring to as kind of bifurcated. I always kind of get pulled back when people talk about crypto as a market as a whole, because like you've alluded to, like there's so many different dynamics across the entire spectrum. Like even Arthur Hayes, who's a guy that I have a lot of respect for and I think is a fantastic writer, he wrote a piece this week which really looked at crypto holistically, which I have a hard time seeing the justification there, with just how like we've discussed, how the dynamics differ so much around these different pockets of crypto.
Yeah, we touched on his piece last week, his bullish piece on ETH going to 10,000, which we'll touch on maybe a little bit later at the end of the podcast. But onto the really big news. FRNT Financial just announced that you guys are going to be going public next Tuesday, April 19th on the TSX. just very, first of all, congratulations. I mean, I know it's been a years-long journey to get there. For our audience, can you describe sort of what FRNT Financial does?
Yeah, sure. And it's important to note that we went through a full IPO process. To our knowledge, and this data isn't necessarily easy to find, we're the first full IPO of any crypto-related entity in Canada. And I think we're also in North America. I mean, like I said, there's not a lot of consolidation around those statistics, but almost everything in the crypto space has been some kind of fast to market offering. So either, direct listing or a SPAC or an RTO. And so us going through this full IPO process had a complete other level of due diligence from regulators, exchanges, et cetera. So, and that was by design. FRNT Financial is essentially service provider institutions within the crypto space. As you know, Andrew, we started off with a kind of a very strong focus on derivatives, which continues to be kind of a core business line offering for us. And it was initially what we raised capital around for FRNT, with the idea that there are so many institutional investors that are kept out of this space due to frictions around participation directly in cryptocurrency. So the initial thesis with FRNT was that we would create, the world's most sophisticated set of structured products / OTC derivatives that would be fiat settled, fully regulated, that would allow institutional investors to access both broader coin offerings. So our platform has things like Solana futures that are regulated for permitted clients only, institutional clients only, Litecoin futures that aren't available on things like the CME. But then what we also think is very interesting and particularly innovative about what we've done is that we've taken some of the dynamics in crypto that we believe are some of the most aggressive market inefficiencies in the space, and we've securitized them. So a good example is that we have a derivative where institutional investors can directly invest in basis with just US dollars, as opposed to having to be long spot, which they may not have to be because there's continued frictions around holding cryptocurrencies, and short a future that they'd have to manage that position. We've created one structured product they can own and get exposure to that. In addition to that, we have OTC deliverable services, which are effectively technology that runs an OTC trading desk for large holders of crypto. We think we're one of the best and most competitive desks in the world. We have a treasury management solution that plays very nicely into that business line as well. In addition to that, over the last year and a half, we've really started to grow our advisory business. So we have several tier one clients that you can go through our prospectus and get some additional color on, who are looking at FRNT to help them get into the digital asset space in whatever way that they want to. So we are advising a tier one exchange. We think that in our future, there'll be other investment banking mandates around capital raising and M&A in our wheelhouse. We're looking at kind of new investment banking structures, such as chain consolidations, to bring the kind of traditional investment banking model to other elements that are just native to crypto. And essentially, we view the institutional adoption of crypto as one of the final major frontiers of mainstreaming the space. There's very little of this that's actually occurred to date. So everything that FRNT is doing is basically providing full service, what looks very much like a full service investment bank coming out of crypto that offers, that allows institutions a variety of tools that they are used to and require for participation in any asset class.
Yeah, exactly. And sort of touching on your previous point about going through the traditional IPO process, obviously that gives clients a much sort of higher level of trust and transparency. And so it fits really well. And I know you guys are also regulated. Just kind of curious, because we've talked a little bit about institutional adoption on this podcast. Where are you seeing sort of pockets of institutional adoption? From what we've seen, it seems to be more with sort of Bitcoin, a little bit of ETH, and then we're still seem pretty far away from sort of like DeFi adoption. I'm just kind of curious, within the crypto sphere, where are you seeing the most interest from institutions?
I do think that the institutional adoption in crypto has been greatly exaggerated. It's part of the basically what continues to happen with the institutional narrative in the space is that the path of least resistance is absolutely retail adoption right now and continues to be. There's way less frictions for retailers to participate. people feel a lot more comfortable playing with their money than their clients' money in the ecosystem. And that's really the path of least resistance in the ecosystem right now. But what tends to happen is that, you have firms that become very successful in attracting retail, such as a Coinbase or an FTX, and they receive these massive valuations that greatly at these huge multiples versus their traditional market competitors, like other exchanges, for example. I mean, Coinbase trades like a fraction, for example, of what the TMX trades every day in terms of notional assets, and has, a 5 to 7 times larger valuation, right? So these firms are constantly looking for a new growth story, and they keep coming back to institutions. And instead of saying, what we say, which is that institutional adoption is kind of a slow process that we're trying to really help and hold people's hands through, what they've tended to do is define institution with a really low bar. So so basically, like if certain investors, retail investors, meet accredited investors qualifications, they're immediately qualified as an institution, which is not what we refer to as an institution. What we refer to as institutions are like hedge funds, pension funds, large capital allocators that are still largely out of this market. And the reason why we think that they're out of this market is because they've essentially looked at the crypto ecosystem, have heard about everything going to the moon, just a very beta-oriented argument for why to participate, and they've taken it off their screens and they've said, this is not an asset class for me until the volatility decreases, because I'm trying to get consistent 10 to 20% returns a year. And Bitcoin's an asset that can decline 40% in a month. So what am I going to do holding this thing? And what we think is going to lead the next level of kind of active trading amongst institutions is this focus on the alpha opportunities in crypto, because that is much more palatable to what they can understand. So in my past life, I covered hedge funds and a variety of different strategies. What we observe every day in the crypto ecosystem and try to represent with our structured products is from a risk-adjusted return standpoint, in our opinion, completely dominate what's available in traditional markets. But the beta argument of crypto has become so overwhelming that any talk of alpha has been completely drowned out. And so all these institutions have basically said, okay, maybe I'll make a private equity investment. Maybe I'll buy an ETF for tiny little bit, but they're not making a commitment because they don't really see the use case for their participation. So I think that asset managers beyond ETF providers are very much not involved in the space unless it's a venture capital fund or something like that. The people that we're seeing really commit to the ecosystem right now are exchange providers, which makes sense in terms of the level of adoption. The incumbents that are really trying to get into the mix right now are tier 1 exchange providers globally. The banks are very cautious and remain very cautious. And I think a lot of the announcements that are made from the banks are mostly lip service. But as the exchanges create this, these markets that these firms are more familiar with, I think that will kick off additional adoption and curiosity from asset managers as counterparties they're more familiar with do start to enter the space. So instead of being exclusively new entrants, it'll be like a mix between new entrants and incumbents, which I think people will, again, continue to push institutions towards, having committed strategies towards the space.
Yeah, totally. I think one of the other sort of parties I'm sure you're aware of too that's entered the space is sort of proprietary trading shops. So like Jump. There's been a number.
Yeah. I should caveat that those firms have definitely fully adopted.
Yeah, exactly. No, I know you know that too. And those guys, exactly like you, they don't necessarily see a space that they want to sort of long, just put an allocation. They're just looking at the returns from different strategies and saying, this is crazy. This market is incredibly inefficient. Mm-hmm. Let's go just do some statistical arbitrage or even just traditional market making. And I know you see a lot of opportunities because you came from sort of the trading floor at BMO. And so, it's very interesting to see kind of, I think you're right. I think banks are probably the last ones in, maybe like smaller hedge funds. Like, I'm just kind of curious.
Yeah. So what the people that we're initially pitching our products to, these kind of alpha based products that give access to some of the trades that you're basically not everybody works like Jane Street or Jump Trading. Not everyone has, a highly technological operation where they feel comfortable tapping into a variety of markets. So, for those firms, the crypto is just like, it's like cocoa futures. It's potatoes. It's just another thing that they can trade, and they see a lot larger spreads. Not every asset manager is set up like a Jump or a Jane Street. the majority of asset management still occurs in some form of human allocation process, or maybe some semi-automated process if you really wanted to push it. And so what we are doing with our products is that we're basically offering the kind of trades that Jump does, having done created a huge amount of infrastructure, and allowing a firm that has more of a human allocation process, which is, still, like I said, the vast majority of assets, to still be able to participate in this ecosystem without creating that kind of an algorithmic trading infrastructure. We proxy that kind of market making infrastructure and then provide a product to them. So, it's massive cost savings for a firm like that. Like, sorry. One of the issues with these firms is that, they don't even know enough about crypto to hire their first person, because they can't tell the difference between someone who knows what they're talking about and someone who doesn't. In addition to the fact that a lot of people who are really entrepreneurial and want to grow businesses like this, they want to start their own businesses. So, the incumbents continue to be at a disadvantage, I think, towards kind of smart and flexible new entrants. There will be some that come in, but I think that there's also going to be kind of a mad dash for firms that have come out and over the next kind of 5 to 10 years, firms that have established themselves within the crypto ecosystem as being kind of smart operators and people who know what they're doing. I think there's going to be kind of a frenzy of buying activity for those firms, because there's so many financial services firms that are going to be caught offside and not have the internal expertise required to participate in this space if it continues to grow.
Yeah, no, I think that's totally right. And from what we've seen too, it does seem like crypto people, it seems like people from the traditional financial markets move to crypto and not the other way around. It's very rare that I hear of someone who is sort of a brilliant crypto native operator moving to sort of a traditional financial, like a bank or something like that, to lead their operations. But
yeah, I mean, it's, all the innovation in finance right now is really happening in crypto. Like, when was the last time you heard about a derivative product that hit Wall Street that was, had some kind of innovative strategy? I mean, it's been a very long time. Maybe the SPAC is something that came around. It's the only thing I can think of. But yeah, I mean, all the fun, all the people that want to really move the ball forward, they're seeing, here's a quick example for moving on to your next question. I used to sit next to one of the largest options traders, in the country and in North America. And we were talking about crypto, and we were talking about perpetual swaps, which, as are the most popular product in crypto. And this gentleman, was barely familiar with the perpetual swap, which to a crypto trader seems crazy. But, there are no perpetual swaps on Wall Street, in all the other asset classes. So, it's interesting. If you want to innovate, it seems like you're trying to start a company in crypto right now.
Yeah, no, I totally agree. And perpetual swaps were sort of invented, I guess, by Arthur at BitMEX. A lot of the innovation recently seems to be happening in the DeFi space. We sometimes sort of talk about our differing views on DeFi. I'm obviously very bullish on DeFi, and I feel like you sometimes have a different perspective on it. Just kind of curious, what are your thoughts on both the kind of explosive growth of DeFi over the last 3 years and as well as the future?
Yeah, so I mean, my skepticism with DeFi is that I haven't been shown that there's an actual fundamental demand for the services provided by DeFi. And when I talk about DeFi, I'm not talking about decentralized currencies. I'm talking more about decentralized applications. So, as that I've been associated with another hedge fund entity for a long time, and director in another entity that is kind of very native crypto trader. And the first time we came across DeFi was around these DeFi services were DEXs back prior to the 2017 bull market. You had ETHFinex, EOSFinex, which were decentralized exchanges that were built on the back of smart contract platforms, and you would go to trade in what was quite a similar way that you would on the fiat crypto centralized exchanges at the time, I should say. But we never participated on those exchanges because one, there wasn't really a lot of liquidity, and two, one of the biggest benefits that you can have is having a relationship with your counterparty. So if something goes wrong, you can, get additional help, et cetera. And we didn't feel like we were meeting our fiduciary responsibility to put assets on an exchange that basically, if something went wrong, there was a vulnerability, there's very little recourse, right? So we kind of watched them with interest, but that was that. this wave of DeFi, I think began with compound finance in the summer of 2020, which coincided with which they kind of introduced, broadly introduced this concept of yield farming when they launched their comp token in the summer of 2020. Okay. Comp token traded to crazy valuations, even though, fundamentally there's very little revenue that gets passed back to comp token at all. And the compound finance itself doesn't make a lot of money. It's very kind of low margin business. And, as a comp token holder, you get very little of that at all. Right. And but for whatever reason, we were starting off a bull market. This sounded new, and comp token traded to a crazy valuation, which allowed yield farming to work, right? Because if you're lending Bitcoin right now to receive Bitcoin or US dollars, yields are pretty low. The only reason why you would get a higher yield that kicked off this yield farming wave is if you were getting a token that was at an inflated price, right? Which I see no real fundamental use case for, right? So the entire yield farming element has, in my opinion, been based off of what I would consider inflated token prices that are offering yields that are well above market because of this kind of bull market that we've been in for the last 2 years in crypto. So when people point to the amount of dollars going into this yield farming apps, I don't view that as fundamental demand, right? So people say, oh, everyone wants DeFi because the money is going into all these platforms. And I say, that's not how I view that. I view the money as going into these high risk cash and carry trades that are based off inflated token valuations. And it's a bit of a crypto financial engineering game. So I haven't seen the use case for it then. And then when you look on the decentralized exchanges, right, which has been the other use case of DeFi that's really exploded, I don't necessarily view Uniswap, for example, as having game changer technology. I think what Uniswap has is that you can launch a token without doing anything, in terms of what you would usually have to do to launch a security. And it's essentially a lot of regulatory arbitrage. So, the main factor that people point to when they talk about about how people really want decentralized services is the growth of decentralized of assets in DeFi applications. But I haven't been convinced yet that the yield farming isn't a funny money game that's going to end. It's musical chairs that's going to end, and that this need for decentralized exchanges is anything more than a regulatory workaround. I don't hear people complain about trading on the NASDAQ that often. If you look at Robinhood's Twitter, it's all people that are looking for someone to help them with an issue they're having on Robinhood. I don't think technology in general is strong enough to run full-scale trading desks right now without human intervention. Maybe when machine learning gets a lot better. But even so, I view it as a very marginal incremental shift. I'm not so much of the idea that, the NASDAQ and, Goldman Sachs are out to get the retail investor. That doesn't resonate that well with me. So I haven't seen the argument to justify that everyone wants decentralized finance, basically.
Yeah, no, and I think that's a very reasonable sort of take on the whole space. I obviously come from a different sort of sphere. I see. So first of all, on the sort of inflated token prices, to me, if you think of tokens as kind of like a call option on the future, and the markets that these DeFi protocols are going after are so big, you know what I mean? Like the lending market is literally in the trillions of dollars. So if Compound, which actually, if you do use Compound, like there is some benefits in terms of like better transparency, it being non-custodial, so the assets are in your wallet and things like that. If you see Compound as having maybe a 1% chance of winning the lending market, and if you're someone like me that thinks that decentralized lending will eventually take over, then maybe these valuations start to make a little bit of sense. And then if that valuation makes sense, it's sort of funny enough, like you said, it adds this reflexivity component to the DeFi protocol because it sucks in capital into the space, given the higher yields that it's able to offer because the token price is so high. So it is definitely very reflexive, as I would say. So in the sense that if you're able to sort of put this narrative that this project can actually win this potentially massive market, then the token does deserve to be high, which then pulls in the capital and actually makes it justified. But the downside to that is because it's reflexive, so it's a positive feedback cycle, it's also reflexive on the way down. And I think you sort of alluded to Terra. Like, I don't want to go too much into Terra because it's more of a, I guess it is actually partly in the DeFi space because they have a stable coin, but they're playing a highly reflexive game where they're offering these very high yields, which then pulls in capital, but then they need to justify the yields by selling tons of Terra to essentially have the capital to pay them out. And so it's highly reflexive on the way up, which is why it's now, I think, the 5th biggest crypto asset in the world. But a lot of people are pointing out that, hey, at some point the music might stop and then it's going to go the other way, and they don't have enough capital to backstop everything. So
no, listen, like the 1% game, the 1% game is always kind of out there too, right? But it's a bit of a dangerous game to play because you could play it. It's like your high school report where if you only get 10 basis points of the internet, you're going to have a huge successful company. So there very well could be a winner, all that. If you added to the probabilities all the way along, right, for this one protocol that you're invested in to be the winner of lending globally, I still think the probabilities will be pretty low that if from a mathematical perspective. But in addition to that, I don't, even if you're right, okay, even if you have a crystal ball that says that comp or whatever, one of the YFIs or something like that is going to dominate this kind of new version of lending 20 years from now, I still think that there's a lot of risk in these valuations. Like, that sounds to me a lot like the internet, right? Where where the .com boom and bust, where basically human imagination wasn't wrong, but it was just way early. And you did have a kind of massive value destruction along the way. And so maybe that is kind of what the DeFi space is setting up for. I'm not totally convinced that everything's going the way of DeFi. And if it did, I think it would have to do more of on-chain technologies getting better. Off-chain technologies getting better, not on-chain technology. Like, that's like, it's more about kind of having, machine learning technology that can continually fix vulnerabilities like you're due on a trading desk than it is about just making sure that, the smart contract platform, works and can scale. It's more about having technology that can, even in a decentralized context, fix itself, because we could very quickly get to very quickly when talking about DeFi, get into like, is anything decentralized anyways, right? So that's kind of my take. Like, there's so much that needs to happen in a very short period of time for these valuations to not be completely overvalued. That's kind of how I see it.
Yeah, no, I think that's fair. I think partly also one of the things that you can sort of use is just imagining that if you do bring down barriers to access, then the overall market will also be bigger. I totally agree with you on governance. I think governance is the least developed aspect of crypto at the moment. And it's actually something that we spend a lot of time sort of working on and researching. And I'm excited to sort of announce some of that stuff as well. But I can't keep you forever because you're a super busy man. So thanks again for coming on DeFi Decoded. And how can people sort of keep up with the IPO and keep up with yourself as well?
Yeah, so a great way for people who want to kind of keep an eye on FRNT is by signing up for our morning note. That was a product. It's now more in the thousands of people that are on it, Andrew. That was a product that we used as a client pull for a long time, but now that we're a public company, we've broadened it out. And as long as your email address doesn't look like it's fake, you will get added to the morning note. I think that's a great way to keep up with this, especially if you thought that some of my perspectives were a little bit more kind of reasonable, level-headed than what you see in the rest of crypto media. That's what we try to bring to the note. And that's what we bring to our clients. Just kind of no, everything's going to the moon, a realistic idea of where we are right now. And then, FRNT is going to be trading on the Toronto Stock Exchange. We're very excited for the listing. We think the competitor that we continue to run into for all of our clients is Galaxy. And Galaxy is, roughly an $8 billion valuation, and our company is going public at less than 100 million. So we think that we We haven't gone too aggressive with our IPO price by any means, particularly with some of the valuations we're discussing here, Andrew. We think it's a great opportunity for investors, and we're really excited to become a public company and to enter this next phase of growth.
Yeah, and I can't echo enough. The morning note, I think I was maybe one of the first 25 subscribers, and it's grown into kind of one of the industry leading newsletters. And so for someone who is both experienced crypto native and also just someone trying to get into the space, particularly from a financial markets background, it is definitely a must read every morning. So anyways, thanks again for coming on the podcast, and really excited to see how everything develops with FRNT. Thanks again.
Too. Thanks, Andrew. Talk to you later.
The information contained herein does not constitute an offer or solicitation by anyone in the United States or in any other jurisdiction in which such an offer or solicitation is not authorized, or to any person to whom it is unlawful to make such an offer or solicitation. Prospective investors who are not residents in Canada should contact their financial advisor to determine whether securities of the funds may be lawfully sold in their jurisdiction.